Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out what's really going on inside these corporate reports. Today, we're diving into a preliminary proxy statement, which might sound boring, but trust me, there's some interesting stuff in here about who's running the show and how they're getting paid, and a chance for the company to ask the shareholders to approve the issuance of more stock. Let's get started. First up, we have GeoVax's, a company working on vaccines and immunotherapies. They're asking their stockholders to vote on a few key things at their annual meeting in the middle of next year. Think of a proxy statement as a ballot that gets sent out in advance for important decisions the company needs its owners or shareholders to vote on, instead of having a big meeting in person. The first item on the agenda is electing 7 directors to the board. These are the people who oversee the company's strategy and performance. Shareholders get to vote on who they think should be in charge. Basically, the company is asking its shareholders, hey, do you approve of these people to keep doing their job? Next, there's a proposal to ratify, meaning approve, the appointment of Whitfley LV as the company's independent auditor. Auditor important because they check the company's financial statements to make sure everything is accurate. It is like the IRS signing off on a regular person's taxes. GeoVax wants to make sure their investors are confident that they are choosing someone competent. Let's take a closer look at who these directors are. We've got David Dodd, who's the chairman, president, and CEO. Basically, he holds all the power in the company. Then there are folks like Randall Chase and Dean Colintzas, who are listed as independent directors. Independence is key here because it means they aren't directly tied to the company's management, which theoretically helps to keep everyone honest. You really don't want a CEO and his buddy to make all the decisions without any supervision from someone impartial. There are a couple more independent directors: Nicole Lemerond, Robert McNally, Jane Morgan, and John Spencer Jr. It's always interesting to see the backgrounds of these board members. You've got people with experience in finance, medicine, and accounting. It's good to have a mix of different expertise on the board so that everyone is not looking at the company in the same way. It's also important to see the dates the people have been on the board. Some of the directors have been there for a long time, while some of the directors are newer. Now, how do these directors get nominated in the first place? The company has a nominating and governance committee that makes recommendations to the board. Stockholders can even suggest candidates. But there aren't really specific minimum qualifications to become a director. The committee looks for people with ethics, integrity, and commitment to the company's long-term interests. It seems like a pretty subjective process, but the goal is to find people who can provide good guidance for GeoVax's integrity and commitment to the company's long-term interests. It seems like a pretty subjective process, but the goal is to find people who can provide good guidance for GeoVax. It is interesting that the company states that 6 of the 7 directors are independent. It seems like a great thing because that means that only one isn't independent, so you get a lot of transparency for the shareholders. The problem though is that there can be several different definitions of independence, so it might be a good idea to look into that. The proxy statement mentions that the company has a written code of business conduct and ethics. Basically, this code is supposed to keep people in line and act ethically. The company requires employees to comply with all laws, avoid conflicts of interest, and act with integrity. It is great that this is stated because it means that GeoVax is trying to do the right thing for everyone, employees and shareholders. Now we shift to the executive officers. These are the top managers who run the day-to-day operations of the company. Besides David Dodd, the CEO, there are people like Kelly McKee, the Chief Medical Officer, Mark Newman, the Chief Scientific Officer, and Mark Reynolds, the Chief Financial Officer. These are the people steering the ship and who will receive the most stock options in the company. Here comes the fun part: executive compensation. This table shows how much the top executives are getting paid in salary, bonuses, and stock options. In 2024, CEO David Dodd made about $646,000, including a salary of $37,000 to $71,000. Now that might sound like a lot, but in the world of biotech, it's actually not that crazy in what you would expect. It's worth noting that a big chunk of his compensation comes in the form of stock options, which means his pay is tied to the company's performance. Basically, it's a way to align executives' incentives with that of the shareholders, to make sure they do a good job to increase the stock price whale. Speaking of compensation, GeoVax has a compensation committee that decides how much to pay the executives. It is worth noting that they said that the Chief Executive Officer and Chief Financial Officer help the committee evaluate the performance of the other officers. Hopefully those in charge of those decisions aren't too biased and are transparent for the good of shareholders. So how do GeoVax executives make most of their money? Stock options are a big deal. The table lays out all the unexercised options, meaning stock at some price that may or may not be in the money depending on the current stock price. For example, David Dodd has 35,000 shares with an exercise price of $2.70, 17 cents. These shares would need to be above that price to become profitable for him. But these options vest over time, so he needs to stick around to actually get them. Stock options is another tool to make sure high-level employees will stay with the company for a long time. Here's something interesting. It looks at how the company's executive pay compares to its performance. For example, GeoVax's CEO made roughly $640.24, but their compensation actually paid was roughly $642,000. But then value of the company based on total shareholder return was 252, and $50 shareholder return was 2.5 million, just each a snapshot of how executive compensation aligns with the company's actual financial results. This year looks like company total shareholder return, where of compensation aligns with the company's actual financial results. This year looks like company total shareholder return was 240,000. Net loss for the company was almost 25 million os. It's a snapshot of how executive compensation aligns with the company's actual financial results. This year looks like company total shareholder return went down versus previous years. It's pretty standard that companies have an insider trading policy, which is a set of rules about when employees can buy or sell the company's stock. GeoVax has one in place to prevent illegal behavior. Let's see what the directors are making. They're not getting paid nearly as much as the executives. For example, Randall Chase, an independent director, made about $65,000 in 2024. This includes cash fees and the value of stock options. This is pretty standard for board members, and it definitely isn't the main source of income for any of them. This section breaks down who owns the company's stock. As of April of 2025, the largest stockholder is Armistice Capital Master Fund, owning roughly 10% of the company. Then when you look at the directors and executive officers, they own very small parts of the company individually. These numbers are important because you really don't want executives owning none of the company. But at the same time, owning a massive amount of shares can also be a bad thing because they can make decisions in their best interest instead of the overall shareholder. Here, the company has to disclose any deals they've done with people who have a close relationship with the company. GeoVax mentions a few private placements, which are basically when they sell shares directly to investors without going through the public markets. There's also some discussion of notes and warrants, which are basically bets on the future of the company. It's worth taking note of these transactions and seeing if they would have a negative effect on shareholders. One of the items shareholders will vote on is the approval of GeoVax's 2025 stock incentive plan. This is a plan that allows the company to give stock options and other equity awards to employees, directors, and contractors. Basically, it gives those people the option to purchase shares and own part of the company in the future. The board thinks these awards are important because they'll help attract, keep, and motivate talented people. The goal of the plan is so the employees can also profit if the company does well. One of the big parts of the stock incentive plan is the contingent grants. That means it will only happen if this stock incentive plan is approved, which is what the shareholders will be voting on. This grant includes the president, CEO, chief medical officer, and scientific officer. That would create even more incentives to do a good job. Of the amount described in the preceding sentence, the maximum aggregate number of shares that may be issued under the 2025 plan through incentive stock options is 1,000, 100,000. So as of right now, GeoVax has been approved to grant 1.7 million shares with the current rules, but the new measure would approve even more to keep the process of granting more as the company gets more shares. The Compensation Committee generally approves the grant of stock options to our directors, executive officer, and eligible employees on a predetermined schedule at its meeting each December. We do not grant equity awards in anticipation of the release of material non-public information that is likely to result in changes to the price of our common stock, and do not time the public release of such information based on award grant dates. The company has not timed the disclosure of material non-public information for the purpose of affecting the value of executive compensation, so you really do have to keep an eye on the performance of the awards. It is really more difficult for any type of insider trading to happen because they have that schedule. The company is seeking stockholder approval to issue over 3.4 million shares upon the exercise of a common stock purchase warrant issued to an institutional investor in connection with a registered direct offering, which closed in March of this year. We need to go over some details for the March 2025 warrant. So the issuance of the common stock is subject to a stockholder approval, but it's supposed to convene a stockholders meeting to obtain such approval, and if the company doesn't obtain stockholder approval, the call meeting will be every 60 days after. The exercise price is 1.31 Thursday, and it expires after 5 years of stockholder approval. The holder cannot exercise any part of their warrant because they would own more than 4.99% of outstanding common stock after exercise. This is great because nobody gets to control the company in an unwanted manner. But with that, the holder can also increase the ownership up to 9.99% after the notice from the holder to the company. In the document, they have some graphs. In 2022, they had 947 total shareholder return, but there was a net loss of over $14 million. In 2023, they had a 545 million total shareholder return, but there was a net loss of 26 million total shareholder return with a net loss of about $25 million. Let's end by looking at the report of the Audit Committee. It mentions that the Audit Committee has reviewed and discussed the audited financial statements with management and the company's independent public accountants, as well as discussed the matters required to be discussed by the applicable requirements of the Public Accounting Oversight Board and the Welcome Back to the channel. In today's video, we're going to be going through how to read an SEC. So after digging through this preliminary proxy statement, what's the story here? GeoVax is basically asking its shareholders to give them the green light on a few key decisions: re-electing the board, approving the auditor, and approving a stock incentive plan. While the executive compensation seems reasonable for a company of this size, it's worth keeping an eye on how that pay aligns with the company's performance. The stock incentive plan seems like a standard tool to keep employees motivated, but shareholders should be aware of the potential dilution that comes with issuing more stock. In terms of assessment of where the company is going with all that has been discussed, they seem like they have good structure and they aren't taking any crazy steps that would really make you pause. So with all that said, they seem okay and should continue along the right path. Thanks for watching. If you found this helpful, give us a thumbs up and leave a comment below. And of course, don't forget to subscribe for more deep dives into the world of corporate filings.